So, hi everyone, this is Alejandro Garza, Alex Garza from AZTLAN Equity Management. I'm the founder and Chief Investment Officer, PM. We're a small investment management boutique based out of McLean, Virginia. We've been in business for 9 years. We have offices in Monterrey, Mexico, Buenos Aires, Argentina, Hong Kong, and I think over the next few months we'll be moving to Houston, Texas. It's an exciting market there, and so stay tuned because I think we're going to be sharing some news regarding our new office location there soon. And so, this time, this is our second monthly market view edition for 2026. After we started this effort last month when we published our first monthly market view video for the year. After almost a year of pause that we took in order to really improve some of the aspects of our investment process, the model, etc. I was particularly focused more on the research side of the strategies. And so now we're presenting this second edition, month of February. This is really the end of the month now. And basically what we're seeing is a rough start to the year with the tariffs front and center, and the impact that these tariffs may have over the coming months and years. To be sure, it's a significant increase in the risk profile for global equity markets in general. Also, I think it's important to keep in mind that these actions are inflationary to the U.S. economy. So we need to keep an eye on inflation there, and the potential interest rate path that we could expect going forward. To make things worse, we're also coming from a strong year in terms of equity returns, both in the U.S. and international equity markets. For AZTLAN, our strategies had a wonderful 2025. We did really well for our clients and for the firm, and for the partners of the firm that, as you know, we're all invested in our strategies. So we're happy and thankful for that. But valuations are also high, significantly higher than average, and I would say maybe a lot higher than one standard deviation above the historical average. So the mix is not encouraging, I have to say. High valuations and all these policies coming to market. The geopolitics also not encouraging. So we'll see if markets can sustain a favorable trend. If we look at corporate earnings, we're still seeing earnings growth and earnings revisions. We see analysts still in this lagging trend where corporates are always ahead by quite a bit, and then analysts trying to catch up to reality. So that would be a positive in terms of the outlook. And well, I mean, also we, as expected, what we're seeing is an increase in volatility and a downturn in markets. Hard to tell if this is temporary or this will constitute a trend, and we're gonna whether or not enter a bear market. But what we are seeing is this positive trend in corporate earnings and earnings revisions. And even though all these policies are inflationary, inflation as it is right now is still, reasonably under control. We'll have to see the future effect. And as we progress this first part of the year and the expected returns, we're still seeing low to mid single digits for global equity markets, and mid to high single digits for U.S. equity markets. And I think that's on the account of the ROE. It's a trend that we've been seeing over the last months and maybe even years. So I think that's on the positive side of things, what we could expect to be a sustaining force for markets going forward. That's the general market view. In terms of the AZTLAN quant model, we're coming from a year where we saw a rotation in terms of factors from growth to value, broadly speaking, and that applies to small mid caps as well as large caps. But I think that the strength that we saw over the course of the last 24 months has been trending down, and so now we're seeing a lot less clarity or definition or direction in terms of factors. I think it's a lot more muted, a lot similar across different factors, with the exception of momentum, which continues to be positive. So that's what we're looking at in terms of the model. The largest allocations right now in terms of the AZTLAN strategies, tech and industrials, financials, and the model continues to indicate a large allocation to materials. The strong increase in commodities or in gold, particularly gold and silver, that we saw last year, is really what I think the model is picking up in terms of the expected effect in earnings and earnings growth. But we have to be cautious in terms of the outlook when it comes to commodities. So it's hard to predict where commodities will go. This is a lagged effect, and maybe 1 or 2 quarters will see that positive impact. But hard to tell if this is something that could be sustained longer term. But in general, that's what we're looking in our model. A very strong increase in materials. And coming from this very large allocation set that we had towards industrials, tech, and financials. So that's it for the month of February. Thank you, everyone, and see you next month. Thanks. Bye.